Welcome back to our series. This is Francis Online Tuition powered by Odum Business Consult. Please learn more at www.ghanaonlineeducation.com. Okay, so let's continue from where we left. We are done with the I aspect of the question. We are moving on to the II, or the second aspect of it. And the question says that in January 2015, new office furniture was purchased for 14,400. This was debited to purchases account, okay? Or this was this was debited to purchase account. Very interesting. Accounting principle have taught us to understand that we should always differentiate between capital expenditure and that of revenue expenditure. One will ask, what is capital expenditure and revenue expenditure? Capital expenditure is an expenditure whose benefit will go beyond one accounting year. Okay, so the benefit of it will extend to more than one accounting year. So you can talk of expenditure on land and building, motor vehicle, and other stuff. But when you say revenue expenditure are the expenditure that the benefit of it will be consumed within one accounting year. Okay, so you can talk of rent expenses for every month, or for a year, or maybe repairs on motor vehicle. Okay, so these are examples of revenue expenditure. So from the question, you could see that an expenditure was incurred on office furniture. Okay, and it has to do with capital expenditure, and it's an asset. And instead of recording it in the asset account, it was rather recorded it in the purchases account. Okay, so the purchases figure that you see here, which is 72,308, has been overbruted, or an amount of this 14,400, which has to do with office furniture, has been included in this amount. Okay, and how do you remove it from this? Okay, how do you remove this 14,400 from this account? And moreover, the asset that you see here, which is 72,200, has been understated, because instead of adding this 14,400 to this one, they've added it to this particular account. Okay, so how do you remove it from here? Then we add it to this account. So we all know that purchases has debit balance, and in reducing this amount, then obviously we have to credit the purchases account, and then we add it to the asset account. And we know all assets have credit balance, they have debit balance. Okay, and to add it to the account, we have to also debit the asset account. Here we are not introducing suspense account, because we have two accounts here, which is going to help us to complete the double entry principle of bookkeeping. And also, the account affected here, which is this and that, they all have debit balances, meaning the debit side of the trial balance is going to be affected. Okay, is going to be affected. But because we have two main accounts here being affected by the error committed, there is no need for us to introduce a suspense account. Don't get confused. Okay, so let's see how we can rectify that. So as I said, you have to move on to your workings. Then the accounts involved, we have to open T account for them. And we have the two main accounts being affected by the mistake committed. We have the office furniture and you have purchases account. And he said we are going to debit asset account in the name of office furniture. Okay, office furniture with amount of 14,400. Then we are removing it from the purchases account. Okay, so we have to credit the purchases account. So in doing that, we are going to credit the purchases account in the name of here is supposed to be purchases. Okay, sorry for that. Here is supposed to be purchases or purchase account, and then when you come to the purchase account, we credit in the name of office furniture. Okay, office furniture, office furniture. Okay, with an amount of 14,400. When you are done with the rectification in the T account, you have to post it from the workings to the actual solution. Okay, which is requirement A, the journal entries. And in writing the journal entry, I said the account debited should be written first. So here, office furniture is debited. Okay, office furniture is debited with the amount of 14,400. Then the one credited will follow, which is purchases. Okay, purchases account, which is 14,400. 14,400. And I said when you are done, you shouldn't forget your narration. So from this, what narration can you give? We can say that a purchase of office furniture or a purchase of an asset treated as purchases now corrected. Okay, or an expenditure on capital expenditure treated as revenue expenditure now corrected. Okay, so we can say that capital expenditure, okay, capital expenditure treated as revenue expenditure now rectified or corrected. Okay, don't forget that, now corrected or rectified. So capital expenditure treated as, okay, treated as, so capital expenditure treated as revenue expenditure now corrected. Okay, and this will fetch you the full mark allocated for that. So once again, I said when the question is given, first you have to read and identify the account being affected by the error. Then you have to use the double entry rules in rectifying that. Okay, so here we got to know that an asset being bought was treated as normal purchases. Okay, and in order to remove it from the purchases account, you have to credit the purchases account, then we debit the asset account, so that the amount shown here can reflect to the actual amount that is supposed to be. Okay, and this one too, it will also go back to its original figure, because this one was understated by 14,400 and this one was bloated by 14,400. So you have to reduce this figure and increase this figure by using the simple double entry principle. And in doing that, you have to open your T account for those accounts. You debit the one supposed to be debited, then you credit the corresponding credit account. After doing that in the T account, you have to transfer it because the requirement says we should show them in a journal entry, not in a T account. Pay attention to the requirement. Okay, so you transfer it from your workings to the actual requirement, which has to do with the journal entries. So this is where I will end the presentation on the second aspect, which has to do with expenditure on assets treated as normal purchases. Okay. Please, if you have not subscribed to our YouTube channel, can you do that for us and click on the bell icon so that you will receive a notification whenever we upload a video. The name for our YouTube channel is GOE TV. Okay, the meaning for GOE is Ghana Online Education, sponsored by Odum Business Consult. Thank you very much for watching. See you soon.